everybody, welcome to the Juniper Links accounting channel. My name's Caroline and today we're going to look at bookkeeping software. So you've got your limited company set up, you've got your business bank account sorted. The next thing you're going to want to do is pick your bookkeeping software, just because you're going to need to start tracking those transactions as one of your main director's responsibilities. So this is part 3 of our limited company essentials accounting course. Without further delay, let's get started with the video. Alright, we're in my computer and we're going to discuss bookkeeping software as part 3 of our limited company essentials course. So I will be going through some things here for you in a second. Step 1, well, not step 1, but why do you need software? So as a company director, you will need to track business transactions basically. So this is like one of your basic duties as a company director. You need to be aware of what's going on in the company, keeping receipt, keeping records. If you're VAT registered, you will need to keep track of all the VAT your company is paying and billing, and keeping receipts for the VAT portion as well. So if you're spending a lot in VAT, then you need to keep the appropriate VAT receipts. You would normally need to have receipts anyway, but when you're doing VAT, you will also need a VAT receipt. And I don't mean you have to have 2 receipts for every transaction. I just mean if you are buying things and they have VAT, just make sure you get a receipt that shows the VAT as well as the main receipt. Just ask for a VAT receipt when you buy something. That should cover it. Software makes all this kind of stuff easy and actually manageable for one person as well. Like it can get out of control if you don't regularly update your stuff. And with the new Making Tax Digital stuff coming out as well this year and also next year, then it's going to be it's going to be essential basically. So essential, yes. All right, actively track your company's available funds such as dividends and what your corporation tax bill is going to be. So this is very important actually. When you've got software and you can update it, you can have basically a real-time transactional history that shows your company's profit and available funds. So this means you can always make sure that you never take too many dividends from the business, because you'll know exactly what is available to take after all taxes have been deducted. And this is the great part about software. This is my favorite part. You never have to worry about taking a director's loan. You never have to worry about receiving a benefit in kind, like a beneficial loan from your company, because you can keep on top of that when you're actively tracking the company's transactions. And ultimately, it saves time, money, and prevents costly mistakes. This is true. All of that is true. And I'm not pushing software in your face or anything. I'm just kind of pointing out some really good things really good ways that it can benefit you, basically. So we have some recommended softwares here for you. There are plenty more than this, of course. So what I would recommend is go ahead, look at the ones that seem to be the most user-friendly to you, because everyone has different preferences. Check what features it has, which I'll go into in a minute, to see exactly when you are experimenting with the software, the things to look out for to make sure it has for you. So our top one is FreeAgent. At the minute, it's the most user-friendly in my opinion, and it also has a clear carried forward balance for your available dividends. And this is really helpful because once you update it, you can basically be like, right, this is the amount of dividends I can take. As long as I don't take more than that, I'm fine. Everything else can be paid for, like all my VAT bills, all my corporation tax, everything's sorted. And all of these software I've mentioned here are Making Tax Digital ready. So you know you can submit your VAT returns through there as well, with Making Tax Digital compliant API and all that stuff. So the next one is Xero. This one has also a user-friendly interface, but the only thing I found it was lacking was a corporation tax estimate for you. So it won't actually show your available profit minus corporation tax. It'll just be your normal profit figure, and then you'd have to calculate the corporation tax yourself, and then you can see what's left as available dividends. It's not a huge deal if you do get Xero. Just remember that the corporation tax isn't accounted for yet, and it's just simply 19%. So, I mean, if you've got a calculator, you can pretty much work it out. It's not too bad, but they do have a nicer interface for sure. And these are more expensive options. but they're expensive for a reason. They actually made it very user-friendly. The UI is good. ClearBooks is the other one that I'm suggesting, only because it's a cheaper option that I am well familiar with. So if you have a different one that you like, then yeah, by all means try it, but also give these other options a chance too, in case they are better than the one that you were planning to use. So ClearBooks will do everything you need, but it does require some accounting knowledge. It's a bit weird. The UI is not very good. Yeah, that's all I can say about it. But it does have corporation tax estimate, and it does have like distributable profit calculation. It can just be a bit funny sometimes, like not always accurate. But if you're looking for a cheap option and you're actually okay with how accounting works, then you should be absolutely fine with ClearBooks. It might just take a bit more time to work out the kinks, but they do also have a forum which people constantly ask questions on. And yes, it is also Making Tax Digital ready. So when you are picking your desired software, when you're picking your software out to start keeping track of all your transactions and things, you want to have a look out for these sorts of features. And these are the main ones that are most useful to you and will make sure that you're keeping on top of everything. So whether it has an available dividend section, so it can actually like calculate this for you by taking away all the taxes, and then whatever's left is available as dividends. Self-assessment returns, again, nice convenience, but not completely necessary. Corporation tax calculation or estimate, this one is helpful because it ties in directly with the available dividends thing. So if it does have it, that's a bonus. Payroll or RTI submissions for your salary. So if you're planning to run salary through the business for either yourself or employees, just double check it has the function to submit payroll. Else you'll have to use HMRC's basic tools, which is free, but it is not nice to use. So if you can get everything in one place, that's a bonus. There is also invoicing, so the ability to create and send invoices, very important because you can actually, you track your income through the business in your bookkeeping software, so you don't have to do it somewhere else and then add it in. All very good for Making Tax Digital purposes. Adding out-of-pocket expenses, so anything you paid for not with the business bank account, very helpful. Actually, it's pretty much essential because it's a way to add in business costs and also pay yourself for those costs. The function to set up automatic bank feeds for bank transactions, not 100% necessary, but very quality of life. I'm going to put quality of life bonus. So basically this means you don't have to constantly manually upload transactions, you don't have to create them individually or anything like that. If you set up the bank feed, then it can just pull the transactions directly from your business account into the software for you to then tell the software what it was for. And that's how all of them will work. So if your invoice payments come in, you can allocate it against the invoice. If you paid yourself for expenses, you can mark it as an expense reimbursement to yourself, which will reduce the out-of-pocket balance owed to you. VAT tracking on expenses and income if you're VAT registered. So super helpful because of Making Tax Digital rules, and also make sure that you're not making any mistakes with how much VAT you're reclaiming, trying to do them yourself. The ability to submit Making Tax Digital VAT returns, big bonus. If it's got it built in, you don't have to worry about getting anything extra. Or if you're adamant on using Excel software, you're going to have to get third-party something to submit your Making Tax Digital VAT returns, which I just think the amount you're going to spend on software versus the annoyance of using Excel, you might as well get a good software. But that's my opinion. You can do whatever you want, of course. And finally, anything else you might need specific to your circumstances, like CIS. So a lot of softwares will have the function for CIS subcontractors, meaning you are the one that's receiving CIS deductions from contractors you're helping. So I know FreeAgent does not support CIS employers. So look out if you do need CIS employers. So you're actually deducting CIS from subcontractors and then wanting to pay that over to HMRC, you're going to need to produce the payslip for the CIS deduction, everything like that, and submit it to HMRC. So again, depending on what you need, pick the software you need because they don't all do the same thing. And number 4, what to use the software for. Didn't mean to do that. And these are just basic things that you'd want to do in your software when you got it. So you might want to run payroll for salary, that's already been covered. I mean, self-explanatory. You want to create and send invoices for your services, very helpful. You want to reclaim out-of-pocket expenses from the company. These are things that you pay for with a personal card or cash that your business account did not have in there. Also for things like mileage, you need to add mileage physically. You can't actually just pay for miles with the business card, that's impossible. So that's why you need an out-of-pocket feature. Uploading business bank transactions, obviously. You need to track those as well. Upload expense receipt for HMRC records. So this is actually like an optional one because you can keep your receipts anywhere. It doesn't have to be on the software or whatever, but this is something, if the software does have that feature, you can kind of have everything in one place, which makes it a bit easy to track everything. If you ever lose your receipts, you know exactly where they are. Knowing myself, I like to make sure I've got a backup of receipts in multiple places, so I probably use the software and also like iCloud or something like that, you know. Just somewhere safe to keep your receipts in case they ever need to be looked at by HMRC. And software should give a profit figure, deduct corporation tax, VAT, and then that provides a carried forward figure for available dividends. And number 5, dividends. Do not take more dividends than available in the company. So dividends are available when the company has profit after tax. So I cannot stress this enough. It is not good to take dividends when there's no profit in the company. Not only are they classed as illegal dividends, I know this sounds horrible, but technically they're illegal dividends. If it happens sometimes, do not worry, you can pay the company back. The problem is when you take way too much and you cannot hope to pay it back in time before your tax is due, and then you can't pay its tax, or you can't pay the company tax, and then this leads to all sorts of other problems. And also if you keep the director loan, so this is what kind of happens when you take too many dividends, it can create a loan from the company. It can create a benefit in kind from the company, you know. So if you have a director's loan that you're not repaying before the corporation tax deadline, then you will need to pay an extra deposit on whatever the loan value is, plus your normal corporation tax bill. It's not fun to do this kind of stuff. And also, if you have an interest-free loan from the business over £10,000, this will become a benefit in kind at the end of the year that needs to be reported on a P11D with your self-assessment, and you need to pay extra tax and national insurance on it. Your company needs to pay national insurance on it. Again, not a pretty picture to... It's just not a good thing to do, so kind of avoid that as best you can. And yeah, make sure you only take profit after tax, nothing else. All right, any funds taken from the company which are not salary or expenses are classed as dividend drawings. So basically, if you are receiving a salary and you're repaying yourself expenses, these are two different kinds of income. So salary is a normal taxable income at 20% in the lower rate. This is just like what most people get from an employer. And also you have the national insurance payments on there. Then you've also got expenses. This is just a repayment. Can be taken anytime. There's no penalty for taking many expense payments to yourself. It's fine. And then the final way to take money out of the company is dividends. So dividend drawings are, again, a different type of income, and they're taxed at 7.5% in the lower rate threshold. So keep these things in mind when you're actually paying yourself. I do have a video about paying yourself from a limited company. Feel free to check that out. And yeah, dividends have to be reported on your self-assessment to pay the tax. This is not taxed at source. Salary is taxed at source with PAYE submissions. All the national insurance and tax shall be deducted as necessary based on the annual salary you receive. Expenses cannot be taxed, they're just repayments, like I said. And dividend drawings are taxed on your self-assessment once per year. The tax year runs up to 5th of April every year. This is the tax year end date. All income between 6th of April to the next year's 5th of April is going to be reported on your self-assessment. You include everything you received in salary, dividends, if you paid gift aid, if you received pension income, All of those sorts of things need to be declared and reported on your self-assessment. There will be what tax has been deducted from your salary on there, so you're not double taxed on anything, obviously. And the rest, so the dividend calculation will be on there. And ideally they're taken quarterly from the company to avoid being mistaken for salary, which is an extra precaution to take. But if you are more comfortable taking monthly dividends to make sure you can cover your costs, do separate the transaction from your salary. Do not pay yourself a lump sum of salary and dividends combined. This looks very, very bad, and HMRC will look at taxing the whole thing as salary, which is not good for you and not good for your company either. So make sure you do separate the payments and also reference or label each payment to yourself as either salary or dividends or expenses to make sure everything's separated and clearly outlined. So if it ever comes into question, you know exactly what's happening. Hey everybody, thanks so much for sticking to the end of the video. If you did like it or if it was helpful, feel free to click that thumbs up button. If you are interested in more course videos that are coming up soon, feel free to subscribe. And also, finally, if I left anything out or if you've got any questions about bookkeeping software or just general stuff, feel free to leave a comment below and I'll get back to you as soon as I can. So hope you guys have a great day and we'll see you again next time.